You claim the greatest gold rush has just begun and that it will be unlike any other in world history, that this is the final and most profitable stage in the gold bull market, which began in the year 2001. 2008 was a tough year for most investors. Please tell us what you see here that has you so bullish.
Yeah, no, obviously we've had a very, very tough year in 2008. The deflationary forces have hit stock markets, commodities, real estate. And, there's been amazing amounts of wealth that have been lost. These deflationary powers look like they're going to be here for quite some time as they continue to wreak havoc in markets. And so people ask me, well, why are you so bullish? Well, because what I see is that, our government has clearly showed us what's in our future. And they are just going to create money, borrow money, whatever they have to do, big borrow, steal it. They don't care. They are going to try to put as much money to avoid the deflationary chaos, panic, and depression that ultimately is going to grip us one way or the other. But the government is trying everything they can to avoid that at the moment. So thus far, we've only seen the deflation really affect stocks, commodities, general stock market stuff, including mining stocks, commodities, and the real estate market. Unfortunately, the fourth hammer to come with all that, at some point, with the amount of money that the government's talking about creating out of thin air or borrowing through treasury bill sales, there's simply not enough people, not enough money out there to fend for this kind of debt structures that the government, U.S. government, is going to have to do. I mean, just look at right now. Obama here is going to get inaugurated next week. He's already admitted that he can't keep most of his campaign promises. He's going to inherit a $1.2 trillion budget deficit before he even gets in office, right? So he's saying he's going to have at least another $1 trillion stimulus package, and we know along the way there's going to be all kinds of other bailouts. So we're actually talking in the United States, I'm guessing that before this year is out, that we are talking about in excess of $3 trillion in 1 year as a budget deficit for the U.S. government. Totally unsustainable, right? And yet this is what they're projecting for years to come. Well, this is unsustainable. Why? Because the main purpose, or the people who have to fund all this don't have the money either because they've lost so much wealth, right? This is where this comes as a crisis. The fourth hammer, so to speak, is when the treasury bonds, when that market collapses. And that is coming. That is coming. Now, is it 6 months away, a year away? I'm not sure. I don't have a crystal ball for that, but I'm telling you, it's got to come. No other way around it. And so what I'm saying is that gold and silver prices in this year, I would say this is the setup year before the mania phase in 2010. I'm saying that and predicting that we're going to see the mania phase in gold sometime latter half of 2010. 2009 is going to set it up. We're probably going to see a lot more problems, after we see a short-term Obama rally. I'm projecting that, the next leg down on the crisis is going to hit with a vengeance. It's going to be worse than what we've seen thus far. You're going to see all kinds of problems. You're going to see bank holidays. I believe you'll see the official term in the United States government for shutting down the banking system is called a bank holiday. I clearly am predicting that we're going to see not one, but multiple bank holidays in 2009, with the first one probably occurring around April, May, maybe even as early as March, depending on, how things pan out here. But in the meantime, prices of gold and silver, which are coming under manipulative pressure, the manipulative pressure just isn't working. Why? Because there's too many people that want to buy gold and silver. The physical demand for it is just keeping the manipulative efforts in check, even though they've been successful in knocking it from levels that would be much higher at this point. The fact that gold is still hanging in there above 800, silver above $10 is very bullish in my opinion. And now what I see, like with the mining stocks, I'm kind of projecting that, sure, we're going to get a big launch in the metal prices here as the next leg down hits these markets. As that happens, I think for the first time, instead of our mining stocks going down with the general stock markets as all this happens, for the first time we'll have the disconnect. I'm looking for that disconnect to start here sometime in the next 6-8 months where mining stocks, regardless of what happens in the general stock markets around the world, mining stocks start to disconnect and go up on their own. Up to this point, every time the general stocks goes down around the world, we're seeing the mining stocks follow, right, where they're getting hammered worse, as much or worse than the general stocks. But I'm looking for that disconnect. And I think once that happens, then as long as markets are functioning, you can make profits, tremendous profits in these mining stocks. But I think you have to take a very shorter time frame. Instead of trying to play this for the long term, I think people need to start looking at every opportunity that gives you a good profit. Take it. Take money off the table, because the markets could correct back severely, in both directions. It can go up, it can go down, and I think that volatility will continue to be with us. But there will be moments when we get some very good pops in these mining stocks, and you can start taking money off the table this year. Now, getting into next year, I just clearly see gold towards the end of the year. We're going to be $2,000 an ounce and higher. And then as that hits, then, gold becomes headline news, and silver. When I say gold, I'm saying silver as well, because I'm a big bull on silver as well. The big moves will happen first in gold. Silver will follow. And as that happens, gold and silver become headline news. And the problems with the T-bills collapsing, that market collapsing because there's nobody that can purchase that amount of T-bills that are being offered, then you've got the fourth hammer that I think takes us right into the depression. See, for me, I see no way out of this anymore. We've painted ourselves into a corner, and all roads lead to the greatest depression the world has ever known, regardless of what the Fed or any central bank does.
I'd like to examine your T-bill thesis a bit further. We've been probably 6 weeks now monitoring the situation closely. Greg, it appears to me and many others that a lot of this bailout money under the TARP plan, I'm sure you're familiar with, designed to help bail out big banks on Wall Street and a few others, about 9 major banks, including Wells Fargo. Several $100 billion tossed their way in many different forms, purchasing up their preferred shares, purchasing some common shares. But a lot of the money that was directed their way, it's not ending up in the form that I think Treasury Secretary Hank Paulson had hoped for, more loans. What it appears to be headed towards is precious metals and the T-bills, T-bonds. Even the longer-term notes, we have seen them catapult 20% or more in just over 2 months. As you say, this cannot be sustained. How much longer do you see this running?
Well, this is the million-dollar question. We know it can't run indefinitely. We know it's not years, what we're talking about. Some people are projecting it could happen as soon as 6 months from now, 3 months, 6 months from now, where this crisis in not being able to raise the money through Treasury bill offerings, it could happen a year from now. It could happen a year and 3 months from now. I'm not sure, but I'm guessing in the next 12 to 16 months, this event is coming. The collapse of the Treasury bills, of that market. And that market is a huge market, right? Mm-hmm. Because everybody in the world has to hold U.S. Treasuries because the U.S. dollar is the reserve currency. And now you have all these central banks around the world. Look what we heard from Japan this morning, wants to devalue their currency, right? Well, that's what they're all doing. They're creating money out of thin air, devaluing their currency. This is very destructive for our system of, creating all this debt. So on top of all the other problems that we have with derivatives that are still imploding through the system, and we're just at the early stages of this, until we get through all the derivative problems. Now you have an even bigger problem, I think, with these T-bill markets. Temporarily right now we're seeing strength because people have run to safety, what they perceive as safety. But as I've been saying for years, that this is a real indication that we're getting close to the end. As people around the world, as all this fiat money that people have, they jump from one fiat currency to another. 4 years ago, they jumped out of the dollar, they went to the euro, right? Now they jumped out of the euro, they're coming back into the dollar, right? So this musical chairs is going to come to an end because the dollar, as a reserve currency, its days are numbered. And as this coming collapse enters the picture and we have to deal with it, what happens? People will flock to the only sound currency that mankind has ever known, and that's gold. This is what we're going through. We have to go through this process of playing musical chairs with all these different currencies back and forth, running to this currency, that currency. But ultimately what people will find is that gold is the only sound currency. And this process, as it comes to reality, as Jim Sinclair says, I like the way he says it, credit him for coining the term, the final solution. Gold is the final solution to these problems. And it's where people are going to turn. Now, as that happens, this is where the mania phase kicks in, because people will all flock to gold and silver as the safe haven, the only safe haven investment that's available. Of course, the market is so tiny the physical gold market, the mining stocks, gold mining stocks, those markets are so infinitesimally smaller than any of these other markets, bond markets, stock markets worldwide, that, a move into the metals at that point, to use another on my cohort analogies there, a Doug Casey analogy, when that move occurs, it will be akin to trying to empty the contents of the Hoover Dam through a garden hose.